So today, we're gonna talk about supply and demand strategies. First of all, my name is Anthony, as a trading analyst of Prime Codex and have been experienced in trading for 6 years. Disclaimer, all information is being presented for educational only purpose. Any information in this video should not be construed as containing investment advice or investment recommendation. Understanding supply and demand in forex trading is crucial, as it underpins price movement and trends. By identifying areas of strong demand and robust supply, traders can pinpoint optimal entry and exit point. This knowledge allows them to anticipate market reaction to economic events and make informed decisions. Recognizing the delicate balance between supply and demand empowers traders to navigate the complexities of the forex market and capitalize on opportunities while managing risk effectively. This video will cover drawing trend line, analyzing price action, using indicator, and choosing the right time frame for supply and demand strategies. Drawing trend line is a common technique in technical analysis to visually represent the direction of price trend and identify potential areas of support and resistance. Here is a step-by-step guide on how to draw trend lines. The first one, we should identify trend direction. Then we choose 2 or more reference points. And then we draw the trend lines. So we should adjust the trend lines and make sure there's no mistake. Practical examples. The first one, we should identify trend direction by paying attention to lower high or high low. As we can see, the price is not making a higher low again. Like this one, the price is still making a higher low, but then the price is start to break the low and making a lower low. So, this peak becomes a lower high due to the previous peak. Then we have to choose reference points. The start point is here, and then we have here. The third one, we have to draw the trend lines by connecting 2 or more points. Then we make sure the trend line completely match to these points. And make sure all steps are required. And we have a trend line here. As we can see, if we move forward and make away from the trend line, we can see the price is continue to making low and moving down. Analyzing price action based on supply and demand involves closely examining how price respond to key support and resistance levels, which are representative of areas where supply and demand imbalance occur. Here's how this analysis is typically conducted. Identify supply and demand zones. Start by identifying significant supply, resistance, and demand or support zones on the price chart. The zones are marked by a cluster of price reversal and indicate areas of strong buying or selling activity. Then we observe reaction at zones. Pay attention to how price behaves when it approaches the zone. In supply zones, look for signs for selling pressure and potential reversals, such as bearish candlestick pattern or price stalling. In demand zone, observe for bullish reaction and potential bounces. The third is confirmation signals. Combine supply and demand analysis with other technical tools or indicators to strengthen your analysis. For example, if price approaches a demand zone and an oversold condition is indicated by an oscillator, it might suggest a higher probability of a bounce. The next is trend analysis. Consider the prevailing market trend when analyzing supply and demand. In an uptrend, demand zones are more likely to hold, leading to bounces. In a downtrend, supply zones are more likely to hold, leading to potential reversal. And then we have volume confirmation. Volume can provide valuable insight into supply and demand dynamics. Higher volume during price reaction at key zone can validate the significance of this level and indicate stronger buying or selling interest. Number 6, we have price rejection. Look for instances where price quickly reverses after touching a supply or demand zone without breaking through it. This rejection can signify the presence of strong supply or demand in the market. Number 7, we have multiple time frame analysis. Consider analyzing supply and demand zone across multiple time frames. What might look like a strong supply zone on a lower time frame could be part of a larger demand zone on a higher time frame. Then we should not forget risk management. Set appropriate stop loss order to protect against potential reversal that may break through the supply or demand zones. Position sizing and risk to reward ratios should align with your trading strategy. And the last is market news and events. Beware of upcoming economic release or event that might impact supply and demand dynamics. Market sentiment can shift abruptly based on such news affecting the behavior of price at key zones. Analyzing price action through the lens of supply and demand allows traders to make a more informed decision about potential entry and exit points. By combining this analysis with all the technical and fundamental factors, traders can develop a comprehensive strategy that takes advantage of the underlying market force driving price movement. Using indicators to identify supply and demand level, while traditional supply and demand analysis primarily relies on price action and support and resistance zones, indicators can be complementary tools for identifying potential supply and demand levels. Here's how some indicators can be utilized: volume indicator, oscillator, moving average, Fibonacci retracement, and many more. Let me move for practical examples. Move through the chart. After we analyze the trend, we should identify supply and demand. We detect the supply demand Here I'm gonna change the color to red. We got one here. Then we move forward. As there's no price coming inside the zone. Then we can detect a zone here, supply zone here, then the zones. We are waiting for the price reaction, signaling the reversal. Here we can figure out a doji and an evening star furthermore. Then we can add indicators to give more confirmation and filter out trade from losses. And I'm going to use the stochastic escalator. With this setting, with the default setting. To detect if the price was in overbought area, as we can see, the price was on it. After those steps, we are expecting the price will move down. Then we try to move him forward. Yeah, the price is completely full. But then we can see there's more supply zone here. And I'm trying to extend the zone and waiting, is there any price reaction signaling the reversal? Price is still bullish, still bullish, and there is, as we can see, here is a dark cover. Inside the supply zone as bearish reversal signal. Oscillator show up above that the stochastic escalator is above 70 or 80. Then we're expecting price is falling down. Back to the presentation. But what time frame is best for supply and demand? The choice of time frame for analyzing supply and demand depends on a trader's goals and trading style. Short-term traders often focus on lower time frames like 5-minute, 15-minute, or an hour chart to identify quick intraday opportunities within supply and demand zones. Medium-term traders might opt for 4-hour or daily charts, capturing swing trades over a few days. Long-term investors may use weekly or monthly chart to support broader supply and demand levels for trend following strategies. Ultimately, the best time frame for supply and demand analysis depends on one's trading objective, risk tolerance, and the amount of time they can dedicate to monitoring the market. Thank you so much for watching this video. Hope you enjoy.